Welcome back, everyone. This is an update on the oil market. WTI's price saw increased activity in the previous days as it broke outside the usual range it had been moving within for the past months. This could be evidence that a significant change has been observed within the fundamentals of the oil market, and through this report we aim to investigate the possible reasons of the sudden change of the price range. We will also be looking into other matters taking place around the world that could affect the oil market. Our technical analysis at the end aims to provide a final and complete picture of the commodities price activity. Looking at the weekly oil market indicators, we have noticed a small but rather important change in the previous week. During the previous days, and specifically on Friday, the 30th of October, the weekly US Baker Hughes oil rig count was released. The reading indicated that active oil rigs had risen by 10 since the previous week, now reaching 221. The increase could be considered an increase of demand for oil, as oil rigs are usually opened when the oil industry tends to be more active. However, on the same day, OPEC released its weekly production levels per member country. The most significant production change came from the group's dominant leader, Saudi Arabia, that increased production by plus 0.5 million barrels since the previous week. An increase in production may have not been expected by the oil market at the moment, and the happening may have been priced in with a subsequent drop of WTI's price after the release of the news, but also with a negative gap opening on Monday. Even though the drop had started since the previous days, the news may have confirmed the bearish tendency. On the other hand, WTI's price rose from the 2nd of November onward. On the 3rd of November, we received the American Petroleum Institute weekly report on inventory levels that indicated a large drawdown of minus 8 million barrels took place. The news, of course, supported a more bullish market for the commodity. Very similar, on the 4th of November, the Energy Information Administration's weekly crude oil inventories indicated another large drawdown of minus 8 million barrels, locking in the bullish appetite for the rest of the day. On a different note, some market participants seem to be associating the results of the US elections with the oil market. According to various sources, it will be interesting to see who will be elected, as the views of the two candidates on the energy market tend to lean towards different directions. On the one hand, we have Joe Biden, which is willing to invest an amount of $2 trillion in green energy, which is not the most positive news for the oil market. On the other hand, we have Donald Trump, that has supported US oil pumping for the past years. The fact that the state of Texas supported Donald Trump could be seen as evidence that producers in the US see Trump's re-election as a way to survive. Oil producers in the US have faced very difficult economic circumstances during 2020, and after the pandemic outbreak, many of them are facing bankruptcies. Finally, the latest rise in COVID-19 cases globally could possibly be a negative sign for the oil market in general. Some countries were forced in new lockdown measures that have the possibility of reducing oil demand. Those were the fundamentals of the commodity. Please stay tuned for the technical analysis. Technically speaking, in the fundamental part of our report, we were referring to the movement noted in our chart with colored lines, which could be said to be shaping the letter V. The movement started with a sell-off that eventually breached all of our support levels, the S1 3780, the S2 3650, and the S3 3450, which was tested but not breached. The movement was followed up by a move higher. We could say that traders may have been aware of the R1 3975 resistance level, thus stop orders may have been placed prior to it, and the commodities price never clearly tested it as it did on the 27th of October. However, if the bullish trend is to continue, then WTI could rise and test the R2 4150 hurdle that was constantly tested many times in October but was not breached in the past month. Our top level, which may be attempted in the scenario of a continuous buying momentum, is the R3 4350 barrier. As the commodity has been moving higher in the past 3 daily sessions, our RSI indicator remains over 50%, implying that some bullish reaction still persists. That's the end of this report. We hope you enjoyed it as well as found it useful. Thank you very much for your time. Enjoy. Solid trading.